right. That one pulled up. All right, so touching on some things from last night. Last night on the charts, we basically set up this training wheels template. It's got a 21 moving average. That's a exponential moving average. You've got your MACD down here. And then these little arrows at the top and the bottom of these candles, those are called fractals. All right, by Bill Williams. Okay. So what I want to do is just touch on these three indicators, just briefly, real quick. Okay. So last night I told you look for these to pop up around this line, depending on the trend. If the candles are closing below this line, they're going to have a pullback, and then this is going to signal the sell around this moving average to follow the trend. On an uptrend, it's vice versa. On a pullback, the green arrow is going to signal the buy once it finds support around the moving average. And that's typically how it works. But where these candles are finding their support or their resistance, that's what I'm going to cover tonight. What is support and resistance and how to identify it, okay? But before I get into that, we're going to go over the different trade styles and analysis. All right, so with this strategy, there's basically two types of analysis we use to trade, okay? The Forex markets are technically pure, meaning technicals rule over fundamentals in this particular market. It's more technical than fundamental, but not solely relying on one or the other. It's a combination of both is what we're going to do, okay? And when I'm speaking about fundamental and technical analysis, I'm talking about looking for news releases versus just looking at the charts patterns, okay? Technical analysis entails a study of historical currency price charts in order to recognize patterns and technical signals, allowing the trader to make a decision as to which direction the price may move. Technical analysis can vary from person to person, as we all see things differently. And that's one of the key things behind the psychology of trading, because depending on what chart a person is looking at or what pattern they're looking at or what cycle within the market they're looking at, one person can see a sell in a very bullish environment coming up where another person just sees straight buy. So that's where it varies from person to person. Roy, I'll go back over the charts. I'm sorry, I didn't know you all couldn't see that. Let's see. All right. So fundamental analysis, as I mentioned earlier, is known as news trading. It's a technique used by traders who predominantly rely on the economic market news releases to determine their directional bias and trade predictions. The methodology behind trade based on fundamental events is the theory that no matter what happens in the short term, the price of your currency trade or investment will eventually follow the released economic data. Fundamental analysis takes events such as interest rates and economic reports into account. Every new trade day, we make a note of heavy and medium news trades on our watch currencies using forexfactory.com or any news site that you wish. And I'll show you what forexfactory.com looks like after I get done here. News appears to be important in regards to the directional bias of a certain currency pair, but all news releases will act to move the market differently. This causes trader confusion and is a weapon used by brokers and market makers for market manipulation. A large percentage of major fundamental news releases are but only an excuse for market makers to distort a trader's directional bias on a certain currency consequently driving the traders to make mistakes and lose money. This is yet another reason why pro traders rely heavily upon technical analysis rather than fundamental analysis. All right, this is swing trading. Swing trading is a style which is centered around executing trades based on medium-term market views. Swing traders, swing trades are those which normally are held from several days, weeks, or even months. This is what Stevenson Linder does, by the way. He's a heavy swing trader. Trades which run for such periods of time are most often analyzed firsthand from a higher time frame chart, such as the 4-hour, the daily, weekly, or the monthly. Typically, we enter anywhere from 2 to 4 trades per month on average, but we will enter several more depending on the cycle. Swing trading is a great style for those who have other responsibilities and have limited time to spend sitting in front of the charts. It's kind of like a set and forget strategy that does not necessitate, daily management. Basically, what that means is, what I'm saying is, once you set your your stop loss and your take profit, or once you set your order and your trailing stop, you can just basically let it run, because your trailing stop is going to close your chart out in profit if it does retrace the number of pips you set your trailing stop loss. Or let's say the order is going to go until it hits either your take profit order or your stop loss order. Swing trading offers opportunities to buy against the trend as well as following the trend. More times than not, we want you to follow the trend, actually. Okay. When you are trading in line with the overall trend, the swing trade setup on the 4-hour time frame could be in the opposite direction to a daily trend. And to understand swing trading, you must understand what a trending market is and what it looks like. The direction of the trend is absolutely essential to trading and analyzing the market. There's 3 types of trends, basically. You've got a bullish trend that's up, a bearish trend that's down, and sideways trends or consolidation. Consolidations, they can be scalped or taken as swing trades depending on the time chart. By looking for entries within the trending market, traders have the best chance to make a large profit on their risk. Okay. Basically, that means your risk to reward, your reward to risk, it should be greater than if you were trading against the trend. Traders who continuously attempt to trade against the trend by attempting to choose the top and bottom of the market generally lose money quite rapidly. To successfully trade the Forex market, you must understand the underlying movements, rhythms, and how to recognize future turning points. The market always moves within the framework of an underlying market wave or pure price action, whether it be up, down, or sideways. Okay, this is what an uptrend looks like. Uptrends are a rallying price that drives price up, making higher highs and higher lows than previous swing points. It's known as a bull trend or a bullish trend. In these trends, we typically only look to buy in situations as a new trader. The yellow circles highlight the swing points. So on the chart, I'm going to show you this with the fractals. Within these yellow blips, you have fractals, or you have swing points that are highlighted. Notice these moving averages right here. This is your 21. The blue line is your 21. So when price came down and retraced, you've had 2 fractals right here. This is a higher high and a higher low to this swing point right here. So ultimately, it's going to go up. But notice, since this is your higher high, when price breaks from this higher high, it comes down to validate that same area that was once a resistance as support. That's done over here. So then now you have a higher high and a higher low from right here. So technically, you're still in the uptrend. So you buy on this pullback is when you're going to buy. And I'll show you this some more on the charts. Downtrends are basically vice versa. They're identified by the lower highs and lower lows in the previous swing points. They're known as a bear trend or a bearish market. And basically all we're looking for in a bearish market is opportunities for sell. Okay, and again, these blips highlight the swing areas or the swing points. So here's the ultimate high. Here's a lower point than the high. Now you find some support, right, from this area. I mean, some resistance from this area right here. Shoots back down, lower low, lower high, then this area. Notice which direction your moving average is pointing is down. I'll show you this some more on the charts as well. All right, so this is a consolidation. Consolidation is a sideways moving market. It basically has no trend direction, and ultimately it's a scalping conditional market, basically, depending on what chart you're looking at. On the hour chart, yeah, you can scalp from hour to hour, basically, and catch a few pips here and there. But this is just a long consolidation, even though there's higher highs and higher lows. Notice the price is within a range. From this high to this low, price is just traded within that range. Big consolidation, still consolidation. It broke down a little bit right here, but then here's the ultimate breakout. So all this is considered consolidation. All right, when a bullish trend is ending, it's similar to the price action of candles, as it is signaled by a higher price rally formation that falls below the highest price point. And a decline in price that breaks below the lowest low from the most recent rally up in price. I'll show you what this means on the charts. There is usually a noticeable shift in momentum in the opposite direction of the predominant trend from a candle reversal pattern. All right, we'll pause it right there. Let's see. So I'll show you what I mean on the charts, guys, as far as support, resistance, and all that good stuff. All right. Okay, so what we're looking at right here is the USJPY currency pair on the 1 hour chart. Okay, what I'm going to show you first is, let me get this off real quick. I'm going to first show you guys how to identify support and resistance. All right. Ooh. All right, so just looking at this chart right here, what we're seeing is what we want to look for is, first off, where's the momentum? So as we can see, the momentum has been bearish, heavy move down, limited uptrend, very heavy down, limited uptrend, very heavy down, limited uptrend, very heavy down. What these fractals are signifying are the different swing points or the different changes in trends. Okay, so here's your impulse, here's your retrace or your pullback. Impulse, pullback, impulse, pullback, impulse, pullback. All right. So what happens is, on the impulse or the strong moves, those strong moves are breaking through levels of support on the downtrend. Okay. And once they break through a level of support, they must go back and retest that same area or that same price and validate that now as a resistance. Okay, so let me mark this for you, or let me show you. Yeah. So here we have a swing up that sets a swing point or a reversal at a high. Okay. So let's mark this as resistance. When the market hits something and reverses down, it hits a ceiling, that's resistance. Okay. So here's your impulse down. Notice though, on this low point, this floor right here, this swing point, is at a floor. So it comes through, breaks through. Here's the breakthrough, right? Notice though, on this breakthrough of structure, there was no retest just yet, okay? Broke through this structure, here's the retest. It broke through it, so found it as support. This next area up is going to test the bottom of this structure right here, or this support that was one support, and validate it as a resistance area because you're starting a downtrend. Okay, let me zoom in. There we go. So as you see this swing point right here, it said it's beneath this structure, beneath this line right here, highlighting a ceiling or a resistance. So now you have the breakthrough candle that's breaking through this low point right here, which was once a support. All right, since it broke through, guess what happens now? Once the breakthrough happens, it's got to retrace a little bit to validate that. That validation comes over here on this pullback, right? Notice now what's happening. If you draw your trend line from this high to this high and keep going, you're now gaining a list of confluence or a list of things that tells you to enter in your sell. Okay. And a further lesson we're going to go in depth is in these candles. I'm going to touch on that actually here a little bit tonight. Because around these areas, there's certain candlestick patterns that form. All right. Let's see. What's on the right? So here's the breakthrough. Here's the breakthrough of this candle broke through this support. Here's the validation of that, right? Here's the low point. Here's a retracement. This is a retracement or a pullback that comes up to validate this support that was broken through, right? Here's another one. Let's see. So now we put another line. Can y'all see the theme that's happening basically? As mentioned, you've got on a downtrend, you've got lower lows, lower highs, lower low, lower high, lower low, lower high, lower high, lower low, lower high. Now you've got a change in trend direction right here. If price breaks above price gets above this line right here, expect it to come up and test the bottom of this area, which was once support. Okay. Notice though, what's right here? A lower high. So, excuse me. Ooh, I can't wait to see this pop up, man. Are there any questions so far? Any questions so far? Oh, all right, I'm gonna keep going. All right. There we go. I'm gonna get to that as well. I'm gonna cover that. So, delete you. Delete you. All right. So Eileen asked a good question. Where would you get in the trade? All right. So I would get in the trade. Last night I touched on Fibonacci as well. Okay, I said on a downtrend, you feel low to high. Your 100% always go at your starting point. The 0 goes at the most recent swing point. Okay, before the inside return up a trend. Last night I said in between the 618 and the 1, because I didn't have the 886 or the 786 on the MetaTrader 4, I said you would enter. But notice though, on this 786, where I have this green line right here, is where I would ideally enter, or would have my pending order set at. And I give you all this Fibonacci number, these Fibonacci numbers in a later sequence. Okay, that's further in the lesson. But once you see price return and it fails at either this point, even right here, if it fails, or if it basically whenever you see this fractal at the top populate, if you're looking to sell, that's when you want to enter basically. Okay. But since we have all these multiple fractals at the low, price found support right here. Now it's bouncing up. So it's going to come up and hit a ceiling basically. It's either going to hit a ceiling right here or right here. Somewhere in this area. Okay. So whenever that fractal, this red fractal appears at the top of this candle, is when I'm going to enter another sell. Does that make sense? It's more detailed than that, but for today's lesson, that's going to be the gist of it, okay? Because I gotta walk you all through this so that way you all understand how each of these things are forming and why they're forming. Let me remove all drawing tools. All right. So let's get into why these fractals form and what they mean, okay? In Forex, there's usually 3 tests, or the number 3 is a very popular number, okay? There's usually like 3 tests to the low. There's usually 3 tests to the high, or there's 3 tests to a support or resistance area or line, okay? So these fractals they form when there's a swing point forming basically, or when there's a 3 candle swing point has formed. And what I mean by that is, let's say we start right here. Okay, so right here, guys, you've got your initial set to the high. Okay. Here's the run to the low that failed. Then you've got another push to the high. So this bullish run is your highest high. All right. So once you have, let me draw this. Hold on, let me show you what I'm talking about. All right. So here's the lesson. A swing point on a candle on a trend. Here's your trend. You got to run up, a pullback, or another run up, a pullback, another run up, and then it's going to pull back. On this pullback down, it's going to run up, push even lower, run up, push even lower. And this right here, this whole thing is a complete 8 cycle or 8 waves. And what this is called is Elliott waves, okay? And that's what the cycle is in Forex. So on each impulse leg, there's always a retracement, okay? Because on each impulse, it broke through a level of support or resistance. Notice where I drew these swing points on this template right here. This is a high. This is a lower high. Or lower low. This is a high. This is a lower low. This is a higher high. This is a higher low. This is a higher high. This is a higher low. This is the lower high, the lower low. The lower high, the lower low. But with each swing point, which is a swing point right here, swing point right here, notice where they met. This is the ultimate high. We'll say this is the weekly high, okay? Here's a breakthrough. So on this next retracement, you could just look at something like this before your ultimate short again. And that's basically the market structure, okay? Let me clear this. But let's get into these swing points. What signifies a swing point, right? All right, so a swing point is signified by, you've got, let's say you're hitting a ceiling, right? This is your, that's your support line. I mean, your resistance line. So if you got a bullish run up, another bullish run up, and let's say maybe a pin bar, right? And then you've got another candle that goes down. That's a support line. Another bullish candle, I mean bearish candle. We color it red, color it red, color it red. Let me see. Color you green, color you green. My art's not too good, but you get the drift, right? So what happens is, here's a high point, here's a higher high point, then here's another high point. That's a 3 candle swing point, which is going to draw that little fractal because it recognizes that as a turning point in the market or a shift in price direction in the market, okay? I can now show you this on the chart real quick. Rebecca asked a good question. Why in Forex do you sell when it's going down, but in normal stocks you buy when the price is low and going down? That is because in stocks, unless you already have, let's say, a certain share of a company or something like that, the only way you really can make profit is if you buy when you first get into it. You see what I'm saying? So then let's say if you wanted to get into Nike, you have to buy so many shares at first. So you want to buy at the lowest point possible. Okay. Um, then let's say if you already have, let's say 10,000 shares and you know prices are going to drop though, if you already have 10,000 shares, you can, sell 5,000 shares at a locked-in rate. And as it falls down, you're going to gain profit because people are buying whatever you're selling. And that's the difference between it though. Forex, you can buy and sell because it's currency that you're exchanging, not necessarily excuse me, not necessarily a stock or a portion of a company. Let's see. All right, so let's look at these fractals real quick, right? Remember I said earlier that they form at the swing points, right? This swing point, here's your high, higher high, and then the lower high. So a fractal appeared. Here's that breakthrough structure that I drew with this candle. Came down. Here's the retest to this structure right here. Does that make sense for you guys, what you're seeing? And guess what's right here? When you see that retest coming up, what's going to be right here is the same thing, guys. A swing point. Here's a high. This one pinned up a little higher, but this one shifted heavily away. So there's a swing point. that's your sell opportunity. Because if you drew a trend line, guess what now? You now have confluence. And then once we get into Fibonacci, this swing point is hitting at the 618, which is the beginning of our entry area. It's at support. It's at your trend line. Your fractal appeared, which is signifying a lower high. So that's like 4 or 5 different confluences, which we'll go over what confluence is later down the road, as far as why to enter that short right there. And sure enough, you know, that's a, let's see, you know, that's 70 pips right there in a single trade. Well, yeah, in a single trade for 2 hours. And the compound plan only requires you to get 30. So you could have knocked off 2 blocks in 2 hours, basically. Any questions so far?
Yeah, so when it comes to the fractals, do they pop up like, I guess, do they pop up like right on time, or does the is there like another candlestick before it actually pops up?
On this third candle,
like
at the beginning of this third candle, or after this candle closes, is when it's going to populate. Okay, so here's how you use them. Let's say you're looking at this on the 1 hour. All right, you bump down one. Well, on this one, I'll bump down to the 15-minute chart. Actually, let me highlight this for you. Delete. On the 15-minute chart, let's pretend like we couldn't see that right now, okay? The 15-minute chart gives you a whole different view. This is what is your entry chart right here, the 15-minute chart, 15-minute and 5-minute chart. And we'll, like I said, we'll go over that later in the lessons. For right now, I need you all to get the basics of the concept as far as why these fractals populate and how they populate. So on the 15-minute chart, you're going to have a few different fractals populate. You could have entered in over here, or you could have entered in on this one. This fractal appeared upon the opening or close of this one. Okay, remember, it takes 3 candles for these fractals to appear. You've got to have if it's going up, you've got to have a higher high, and then a lower high. And that's going to make a fractal appear. So if you're looking on the 1 hour to go short, let's see. Actually, let me see on this one. All right. So, well, what I'm going to do right now is just let you all watch on the 3-minute chart how these fractals appear. So a fractal, if this candle doesn't break out or continue down low, if it pins the low, the next bullish candle is going to put a fractal on one of these 2 candles. And what happens is, if it forms a true swing point, that's what happens. So here, like for instance, on this swing low, you've got the low, a lower low that pulled back. Here's your reversal pattern formed up. And in all these swings, what's happening is reversal candle patterns. And we'll be going over this tomorrow's lesson. We'll get into the candle patterns and the candles and things like that. But basically, that's a 3-candle reversal pattern. Okay. Also, that's a swing point. So if you know that's a 3-candle reversal pattern, this fractal comes up at a swing point that was at a previous low right here as well. That's a good opportunity to buy. Also, it's at support. That's really the only times you want to enter the market, is when the market is at a support or a resistance. But when you enter, you want to be sure you're following the overall trend as new traders. Don't be counter trend trading. Okay. Does that help you out?
Yes, it does.
All right, cool. I'm trying to just let a fractal appear on these next candle. So here in about a few minutes, I'd say about the next 3 to 6 minutes, we'll see a fractal populate, and you'll see the nice move up, depending on how it closes. So we'll just see. Any other questions? Oh my God. Yo. Questions? All right, so notice though, how you've got a low. This candle made a lower low, but this made a lower high. So depending on when this candle goes bullish, or if it does go bullish, you'll see the fractal form, like I said, on one of these three candles. Probably this green one, since this has the lowest low. And if it's going to be a true swing point. So when this candle closes, you should see a fractal appear. Now, these fractals, sometimes they're wrong. Don't get me right. I mean, don't mistake it. Sometimes they're wrong. Don't get it right. And the reasons that they're wrong is usually on the trend switches or the true trend changes as far as like what chart you're looking at and things like that. And we'll get into depth in that on a later. Is the support always at the lower lows? And yeah, exactly, Rebecca. Support is always at the lowest lows, and then resistance is always at the higher highs. Good question. No, Elroy, it actually helps you form your entry. Okay, because on your entry, guys, you never want to, let's say, be premature just yet as new traders. Okay, you want to wait for the market to show its hand, basically. And these fractals form. Let's say if you have to wait for the reversal to form, basically. Okay, because this candle could have pinned all the way up here and then boom, all the way down. Whereas on this 3 candle formation, once you see this candle close, here's your entry. Here's another opportunity right here to enter. You see what I'm saying? So you're not missing anything. So you don't have to worry about, when to get in. When that fractal forms, begin to look for your entry basically, because you still have a lot of pips to catch. I'm trying to let this fractal form, man. So that way you all see. So when this candle closes, it should be a fractal at this low right here on this green candle, and then this next couple of candles should go all the way up. And when these fractals form, boom, like I said, here's your fractal. If you entered, you'd probably be in profit. And where it's going to is to this next fractal. This is where it's going to test. Now, don't get me wrong. This is the first time that it was at that low. So when it comes up, expect it to retrace a little bit, find another support or a lower high than this low, and then come up. And that's a swing point, and that's how they form. Does that help you all out now that you all have seen it in actual action?
So at that swing point, do we buy or do we sell?
At the lows, you buy. At the highs, you sell. Okay, but now don't pay attention to what time frame I'm on or anything like that. I'm going to go over all that in further in the future and things like that. But I just wanted you all to see how a swing point is formed at these fractals. Okay, so basically on this fractal right here, this pullback, like as a seasoned trader, I would have already been in. But as a new trader, just learning the markets, you're in on this candle right here. So after this candle closes is when you're going to enter. So you had a little drawdown, but ultimately, look what happened. Boom. You would have won all this and had made another low. But like I said, on a downtrend, you've got an impulse, retracement, and then you've got the impulse, retracement, then you got an impulse. And remember, on swing points and resistances and supports and things like that, remember I said the number 3 is very important, right? Every swing point or every fractal that you all see that's formed on the chart is going to be retested to validate it at some point in the future. May not happen immediately, sometimes it does, but at some point it's going to be retested, all right? So for instance, on this swing point, it went down, but that high had to be retested to validate this as a resistance area. But it failed it. So it broke through it and made a higher high. And so since it broke through that price area, now it had to validate it as a support. So that's when it comes down and tests it with these 2 lows right here. Or actually 1, 2, 3, 4 lows. Found this whole area as support before it shot up again. And that's how the market runs. And that's just like a basic lesson. I'll cover all this stuff in detail further on down the road. But like I said, I want to just keep this very simple so that way you all can get a feel for everything and how everything is working. And then once I, give it to you piece by piece, I'll polish you all off with the full thing all together. So that way you can follow along. All right, cool. So now on this right here, notice though, there may be a fractal that appears, it may not. If it doesn't appear, just understand that this bearish move is just a retest to validate this price area right here as support. So then it's going to shoot back up. That's what's up. I'm proud to hear. Proud to read that, man. It makes me feel good. Let's see. Did any of you all read the first chapter of the book? You all can be honest, honestly.
Yes, I loved it.
Yes. It's a great chapter to actually read, dig into it. Like I said, that whole book is full of nuggets, honestly. Like if you all have the extra time, read the whole thing. But like I said, that one is going to help you set up your mentality as far as how to make it in this industry. All right. So if you haven't read it, that's fine. Just catch up on it. But tonight, I need you all to read chapter 2 because it's going to touch up on a little bit other things, and then that's it. Just read the chapter 2 sections. It's going to go over. Let me see. Let me pull it up real quick. And I've got some homework questions that I'm gonna put out for you guys that I need you all to try to complete. It's going to be what we went over yesterday. So if you missed yesterday, go back and rewatch the recording. And it's about 10 to 13 questions that I have. Just goes over with everything I went over yesterday. Like I said, chapter 2 it goes over the math psychology of the market, psychology of trends, and then managing versus forecasting and things like that. It's going to chapter 1 gave you individual psychology. So part 2 is going to go on a bigger level and give you the market as a whole, or the psychology behind the market as a whole. So just read chapter 2, and then I'm gonna ask you some questions on chapter 2 on Thursday. So I'll send the link. Let me get this other homework for you real quick. And if you all have any questions, please ask them right now. I'm not going to be on here too long tonight, actually. No, Rebecca, if you don't have the recordings, inbox me on Facebook at Wallis Feragamo. Wallis Feragamo on Facebook. Basically, inbox me, and then I'll set you up with the recording. Well, actually, hold on. I forgot the link. Give me just a second. That's the recording from last night. Oh, jeez. And then all right, so I just sent out the link for the homework. I'll show you what it is. All right, let me share my screen real quick. All right, so basically it's like I said, just a few questions, multiple choice questions. Touches on basically the bulk of the information or the key points of the things that I covered on in the PowerPoint. All right, only the PowerPoint. That way I have something to measure as far as, do you all understand the basics of Forex and things like that. So if you need to go back and rewatch the recording, then I recommend that you do so. But like I said, it's just a few questions. This must be done, like I said, by Thursday. If you don't have it done by Thursday, then I can't allow you to proceed, because I won't know if you actually understand the basics. So you won't understand anything after the basics. Next week we get into the more advanced stuff. And that's how I'm gonna do the homework. So like I said, it's not too much that I require from you all, but I do require it to be done. Let's see, any questions? That's okay. Just get with me on Facebook, and then you can like email it to me or send it to me on Facebook, and then I'll check it with you, and I'll just get back with you in some way. But like I said, all the sessions are going to be recorded, but I just need to make sure that you have it done. So if you all don't have me on Facebook, add me at Wallis Feragamo. Be sure to send me a message so that way I know that you're doing the course, or otherwise you won't get added, because I have like a shit ton of people waiting to be added. I'm not gonna lie, but so just please do that. And then like I said, I won't keep you all too long tonight. Be looking for me to send out some kind of trade alert, probably around in between 11 p.m. Eastern Standard Time and 1 a.m. Eastern Standard Time is when I look for my entries. I'll send out a nice signal for us to catch at least 30 pips. All right. Other than that, guys, that's all I really have for you tonight. Are there any questions over anything?
As far as the homework goes, is when we hit the link and we answer the questions, does that send you the answers, or how will you get the answers?
You got to send them to me on Facebook. You just send me the file on Facebook after you download it.
Gotcha.
All right. Any other questions?
As far as what is it, the My FX book or whatever it's called?
Yes, I got it.
To work either.
You didn't get yours to work either with it?
Like as far as like trying to connect the I guess my account with it, it wouldn't take it either.
No, okay, so it's not just me. Yeah, I'm gonna have to ask then my FX book support about what's going on with that then.
Yeah.
Yeah, same
That's
here.
yeah, that's going to be a big part of this whole course actually is tracking your all's progress. It's not for me, it's more for y'all. So that way you all actually see it, whether or not you're progressing or not, and things like that. Because you can make money in this all day, but if you're not, consistent with it, and if you're not able to study the trades you took and why you took them, you're not going to be able to replicate what you did. And a lot of new people don't really understand that, how important it is to keep a record of your trades you take. So that way you can become repetitive at what you're looking at or as far as why you took that trade. It's like you're learning a skill. If the key to this market is support and resistance, and history repeats itself basically. What it did one time at that same area is more than likely going to happen at that same time. So if you know why you took an area or took a trade at a particular area, then once price gets back there, if you have a record of it before or previous, you're going to understand why you took it before, and then you're going to look at price again and understand why you can take it now. That makes sense. So it's important for you guys, just to have a record of your trades. Not only that, once you all become, proficient at this becomes part of your taxes. Um, right off the bat, if you don't have a home business or anything like that, you're taxed at as capital gains, which is like 27% or something like that, something outrageous. Not only that, you're required, to have a track of every trade that you take to give to like your CPA and things like that, because you have to keep track of your losses and your profits as capital gains. So it's like I said, it's just deeper than a lot of people think. But that's just a little lesson behind it all. Let's see. If there's no more questions, we'll cut it short tonight. Tomorrow we will do another one at about 8 o'clock. Um, let's see. And then tomorrow will basically be a review of the whole week. So what I'll basically do is go over, a few topics that I touched up on yesterday, go over today, and then we'll tie it all together in one big lesson. So that way you can see how everything works in one big lesson, basically. And then come next week, we bump it up a little bit. I'll tie up this week and then add some more advanced stuff on top of it. So I like how doing it in steps. So I'm just not throwing up information on you pretty much. You know what I mean? I got to give you all some time to, recept it. So, but that's the link to the homework I just sent out, Rebecca. And other than that, guys, this session was recorded as well. I'll have the recording posted up later and send out the link. All right. You all have a good night trading, and hopefully y'all learned something today. And good luck.
Thank you. Good night.
No problem, guys.